Welcome back to Buying a Home in Queenstown property series. Previously we talked about finance and loans available to New Zealand residents. Today I'd like to talk about overseas ownership. Queenstown is a desirable location for many people, and our local council records show that about 10% of houses in Queenstown are in the hands of foreign owners. That's a similar figure to our own Bailey's sales statistics for the last 12 months that show around 12% of properties being bought by people from overseas. Today with me is Stuart Mitchell of Loan Market Queenstown, and Stuart will tell us all about finance for overseas buyers. How are you, Stuart?
Good, thank you.
Tell me, important question, is finance for overseas buyers available in New Zealand today?
Yes, it is. There's the tap was turned off completely for a few months from probably around July time last year. Yeah. The reason being that the lenders in Australia found over $1 billion worth of fraudulent Chinese home loan documentation in Australia, and that meant that the funding for anybody overseas, even expats, the door was closed for several months. Where we are today, funding is available, but it's split into various different categories. So if you are an expat and you live anywhere throughout the world, it will be considered on a case-by-case basis. If you're an Australian, some of the major banks here still will not lend to overseas, even if you're an Australian, believe it or not, living and working in Australia. However, but we've got a couple of lenders that will lend to Australians pretty much regardless. And then what you've got is anybody further overseas, so you could have somebody United States or Singaporean, which we do deal with a lot of overseas in Queenstown, yes. As you can imagine. They are all literally case-by-case basis. So if an investor was looking to purchase an existing property, again, you still require 40% deposit. If you are looking to build as an overseas investor, if you're an Australian, we can use a 20 to 30% deposit, or expat. Anywhere else, you'll be looking at probably a minimum of 30% deposit.
30%, yeah, that's quite a chunk of money.
For new build.
For new build, okay.
Yeah.
All right. So how about self-employed people? Because there's a number of, I deal with a number of clients who are self-employed.
Yeah, sure, good question. So again, some of the major banks are still dark on self-employed. Where you are with Australians, they will look, we've got 2 lenders that are more than happy to consider self-employed, the rest won't. If you are self-employed and further afield, that is really, we've probably got 1 lender, but it really is case-by-case basis. And believe it or not, regardless of strength, they want countries that they can verify supporting documentation very easily and easy to understand.
Right.
But certainly case by case.
Right. So how long does it take? Is it all, people, when people make an offer, it's probably subject to due diligence or finance. Yeah. Is 5 days, 10 days enough?
Yeah, so from our perspective, once we've received all the supporting documentation, we allow generally up to 5 working days to be able to turn the finance around.
And that's if they provide everything that you need?
Yes, correct. Right. Once we've got everything and we've been able to submit it,
yes.
5 working days from that point, we will have answers.
Right. Oh, that's reassuring. It is reassuring. We sell a lot of properties through auctions, and people have to do it beforehand before they come to the auction floor. So that's still a good time frame, I'd say. In this market, after everything that happened. Yeah.
Certainly, yeah. Things like valuations and building inspections will take quite a bit longer than that. So we're usually, most certainly within the required time frame, we can turn the finance around. And I think it's also important to note as well, when we're looking at overseas income, that your clients need to be aware that income is actually scaled back when you're in an overseas income.
And what does it mean?
Due to risk of exchange rate fluctuation. So we have the worst case scenario is one of our lenders will scale it back by 30%, right down to 0% with one of our lenders. The others are between 10 and 15%. So depending on how strong your client is and their intention, whether it's to purchase further property, we direct the client to the right bank, and that's one of the criteria we have to consider, is the scaling back of income.
Well, I guess that really asks for a proper discussion with you, if it's case-by-case basis mostly for overseas buyers. you'll be best, if you're one of those people, it would be best to contact Stuart directly. His contact details will be at the end of the video there. Well, thank you very much for that, Stuart.
No problem.
I won't keep you any longer. I know I've got lots going on.
No worries,
Thanks.
thank you.